Hello everyone, today we're going to do a full overview on the exact strategy I used to make 300k in the last 5 months. I've been using this model for around a year and a half now. This is just through trading prop firms. So the whole basis of the video, what we're really going to go through today is we're going to jump straight over to proof just so I can prove to everybody I'm not lying about the person I am, and I can show you that. The way it's going to go is we're going to really cover the golden OTE three-step model, which is the whole model in general. Go through what I look for, key things and key knowledge as well, then finally getting onto 5 recaps of the 5 recent days, including today. And let's get straight through it. I'll show some of the big firms from this year. Obviously Apex, upwards of 100,000 paid in, I think it was around a month and a bit with just Apex. I believe so. And then we do have Tradeify. Once again, we have around 30,000 paid through prop firm accounts, and then we had around 20 to 30,000 paid on live. Now the live payouts only show up via Gmail, so it's not like it can show up on a dashboard. There's no live dashboard, if that makes sense. Lucid, we literally just started with Lucid. I think it's been around 12k in this week, and then we have some of the MyFunny Future payouts here. Yeah, the infamous 52k that put me on the leaderboard. And of course that was a beautiful payout this year. We took that. I think I took those trades live with my students as well, and then obviously Top Step as well. I was using this firm at the start of the year. We only have around 70 or 80k paid of Top Step, I think, with all these rows. So it's not necessarily huge, but it's it's a good firm. It's a good firm. We also have loads of micro firms that I don't really want to involve. So we have things like TPT, or for example Funded Next, which I'm about to rinse tonight. I'm about to take out max payout with Funded Next tonight. TPT, Funded Next, and some other just little firms where I have 10k-ish paid, and it's just not enough to show. Okay, now getting over to the most important part, which is what I trade. Okay, so we've gone through the proof and obviously me demonstrating what my model's given me in return. Now, what actually do I trade, and why do I call it the golden OTE three-step? So starting through obviously the most important part, we're identifying that what I trade is OTE. Okay, the golden three-step is something that I've created over the past 2 years, and it's something that I use to distinguish my A+ setups. Now, what am I even looking for, right? Starting with a clear higher time frame bias draw. So any prop firm trader who's profitable is usually relying on having a higher time frame or just consistent winning bias. Your linear curvature of profit will be extremely positive if you have an edge aligned with a, let's say, 80 to 90% accurate bias, right? So thus, if you are like not including a valid bias and you're usually just implementing the A+ sectors of the trade, for example, is the range reacting off of something, blah blah blah, your win rate will be extremely low. Now obviously if people don't even know what I'm trading, you won't even understand what I just said. However, what we need to say is before we even do anything, before we even understand what OTE is, we need to get a clear grasp of what higher time frame bias and draw is, and how we can have a consistent go at basically finding that draw. Okay, number 2, extremely important, this is the second part of the OTE golden step, and it's valid ranges trading towards that draw. So we've identified the draw, right? Now you need to trade a valid range that's trading towards it. Now what makes a valid range is something that's rejecting off of something important, because there's going to be on the charts millions of highs and lows that get made that essentially can be used to create ranges. However, we need to look for those ranges that are valid, for example rejecting off of higher time frame PD rays, or key times like New York AM or New York PM, where we reverse and we create those highs and lows towards our draw. Now, extremely important for trading low leverage firms, which I'll be getting onto for prop firm trading, 3 to 4 trades max. Now this isn't due to anything other than psychological. Trades can appear more than 3 to 4 times a day, but if you're losing 3 to 4, there is no reason to continue trading. Now, if we are trading on a low leverage firm, right, which is what I'm majorly going to be teaching, not high leverage, you will be risking $200 per set of accounts. So realistically, your return on, let's say you are buying 20 Apex accounts and you spend roughly 2,000 to 2,500. Now you have these funded accounts now, and you had your expenditure of 2,000 to 2,500, right? Each payout cycle on these 20 accounts will be 10x that, showing the ROI on prop firms is rather big, especially that you're risking $200 per account. You're risking, what is that, like 10% of the account of the drawdown. You have 10 trades until you blow that account, right? Now, 3 to 4 trades a day, anything after 3 to 4, you're just going to be taking worse setups. Psychologically and statistically, you don't want to be trading any more than losing 800 in a day. That's just my own thought process, and that's also just something to keep people in line with their own emotions and psychology, and just to make sure that you don't tilt, because with OTE you don't really tilt a lot due to the model being so simplistic, but also so hard to mess up at the same time, if that makes sense. Now, this is the most important part. So, for the golden OTE 3-step, the way it goes is, number 1, we have the higher time frame bias. Number 2, we have the valid range. However, number 3, we need to have an unmitigated PD rate inside of that valid range. So when we've marked our OTE, our fib, our range, okay, we need to then align unmitigated PD rates within the 705, the 62, and the 79. Now we'll be going over this in the recaps and going over real chart examples that I've taken myself with proof. Okay, and we'll be distinguishing what makes a valid setup and what doesn't make a valid setup. Okay, now this is extremely funny, right? This is kind of a weird thing to say. Trade with the flow. Okay, everybody in this day and age on TikTok or on YouTube, everyone's trying to come up with a new crazy model, and these people aren't even that good at trading. They're just trying to say, oh, I'm catching high of day or low of day. The best traders keep it simple. If we're dumping on the monthly or the weekly or the daily, why would you want to be egotistical and change that the trajectory of price and look for longs, you know? Sometimes the clearest bias is the simplest bias, okay? So trading with the flow, if we're in a daily downtrend, right, and this is something I know every single model that exists, every single concept, order flow, what you name it, but sometimes just trading with the statistical advantage that price is going down towards something important is really important, just to continue that continuation and look for those continuation trades. Now, the 3-step rule is basically the whole of this combined. The 3-step rule, like I said, bias, valid range, and then unmitigated PDAs inside of that valid range. Moving on to some key knowledge and key things to know. First of all, this is a prop firm only trading strategy. Now, similar to many profitable traders, the whole idea is to take advantage of prop firm ROI with an edge. So, just like I said before, let me explain it quite slowly and easily. Prop firms produce, if I adjust my mic a little bit, prop firms produce propaganda across the media all the time, explaining to you how you need to treat a prop firm like it's your own live account. Rules are exceptionally important when it comes to following your mechanical or discretionary model. However, you need to learn to take advantage of certain trading setups and certain trading accounts under that same rule. So giving you guys an example right now. You have a model, okay? Now with this model, you're expecting to get in these fundeds and get out as soon as you get that payout, right? So you're pretty much trying to, bring it up a couple trades, get the payout and get out. You're not trying to have this expenditure of consistency for months and months and months in order to get a payout. It can literally take 3 days, okay? Now the money you pay for that eval, you need to find a way to find that to be profitable for you. So let's say realistically you have 10,000 Great British pounds in your bank account. Okay, now your idea is to use the ROI of prop firms, okay, and use the edge you have to then multiply, okay, and scale, right? Now, a way this makes sense is the majority of futures evaluation accounts will cost 1/10 of what you can make in return, okay? Now, essentially, even full porting A+ setups would leave you profitable in that scenario. Now, this is why we teach to trade prop firm ROI with an edge, because if you have bias and you have an edge in the market, that is a positive curvature. So if your bias is right, like I said before, 90% of the time, and you're trading towards that bias, then essentially, statistically, you'll be winning more trades. That's simple. Now, to use the edge towards that on evals, you are likely to use more leverage and use lower RR. Now, on evals, we expect to get these done exceptionally fast, okay? Now, that's because of the ROI and prop firms. We treat funded accounts differently to evals. However, evals are going to cost only around $100 to $150, with the max payout being anywhere from 1K to 2K to even 100K on some accounts. So the fact that we're getting the buying power of essentially having a 50K live account with 2,000 plus drawdown, we should take advantage of that with prop firm ROI, okay? Because prop firm ROI isn't taught, okay, but it's the best way to use a model to actually gain and scale your own bank and money in that scenario, okay? Number two, news days does not mean no trades. Now, this is a huge stigma in the trading market right now. Yes, in some scenarios, for example, FOMC day, you don't want to trade days that induce random volatility and that can, inconsistently show damage to your trading accounts, right? Now, the only days you should be trading evals with evals is on news days. So, like, sorry, that doesn't make sense. If there's a news day like FOMC, you don't want to be risking your own capital. So live accounts are completely outside of the market, right? But genuine prop firm accounts, if you want to see consistency in your model and you want to hold that positive curvature of linear growth over time, it's better to stick away from some news days. But if we have, say, CPI, who's to say we can't use the highs and lows from CPI and trade that day? If we have NFP, all of these data lows and data highs can be used inside of our model with OTE to then benefit, which I'll teach later on. Okay, but on obviously days like FOMC, we want to be sticking away from trading our funders on these days just because of the unpredictability and the volatile that follows. Okay, I'll be going through A plus V's B V's F setups right now. This is really important because with actually gaining an edge in the market, we need to understand that A plus is going to be how we do that. Now, with OTE, it's extremely and exceptionally easy to identify A+, but to have that psychology to only be taking A+, is what's going to come over time. Now, no A+ is going to have a 100% win rate. However, if you can learn to follow the 3-step rule and identify A+ setups over that lineage of time, you will see a positive correlation, okay, and you will see positive gains, okay. However, if you decide to lack with that and you decide to be impatient and take those B to F setups, so you don't have that accountability, don't expect to see the same positive growth on any accounts, eval, funded, whatever. Evals will expect to see, if you obviously the way I'm teaching how to trade evals is to take these same OTE setups with a larger stop, possibly covering the 6.2, the 7.05, and the 7.9. Now, before we even get onto the recaps, I will be going over the ultimate basic of trading my model, okay? Because some people, unlike many, because you've seen me on TikTok or Instagram, unlike some people, they might not even have any idea how to trade OTE. But before we get onto the recaps, I will be going through that. Now, this is extremely important. High leverage, these low leverage accounts, how to trade them, and then this also goes in line with best way to scale on prop firms. Now, I'll be going over the best firms to trade alongside how we trade high leverage versus low leverage. So people have many different ways of trading. Some people who are very profitable like to cycle accounts, go get loads of accounts, and then obviously scale into these accounts and take complete advantage of the ROI with an edge. The way I like to do that is only on high leverage. If I have a high leverage account, I want to be risking pretty much the whole of that account on my funded. Let's see it like this. The My Funded Future Pro account, it costs $200. Like, let's say your pass rate on this account is 30 to 40%. Okay? So you're spending about $400 to get this account, right? Maybe $600. This account is pretty much the exact same as an AMP live account with 2,000 drawdown. Okay? Whatever money you make on this account, the majority of it you can withdraw. So if you was to full port your whole account, which by the way, you need to be obviously having an understanding ROI at this point, and you need to also have the funds to back it because you will blow accounts in this way. High leverage, you're risking a lot more for a big return. So you have 3 pro accounts. Your win rate is 37%, okay? And you're trading OTE with A+. First account blown, second account, let me adjust my camera. Second account, you get a winning trade with A+. Okay? Now this winning trade could be anywhere from a 5 RR to a 10 RR, okay? 10 RR risking 2k is going to be 20,000 to your bank account. That is going to be 40x of what you paid in return. Now that's why high leverage can be great, but not when you're starting out and learning how to scale. And that's why we switch over to low leverage accounts. And this is my favorite way to trade because it's extremely consistent and it's kind of just going hand in hand with following your rules and taking A+. There's only 2 ways to trade low leverage accounts. You cannot win by gambling and you need to trade properly, okay? Now that requires A+ setups and patience. If you was to stack 20 Apex 300k accounts, okay, and you was to trade each one risking $200, okay, or if it's 300k you'll be risking 600, whatever. Inevitably you'd have 10 trades before these accounts are officially blown. Now, if you was to stick to exactly what you know and trade A+ only, there is an an inevitable chance, if you were taking A plus with OTE with my model that I'm teaching, you would not blow these accounts. Okay, in return, it would be a $70,000 per payout cycle. The investment return, like I said, being from maybe you're spending 4,000 to 5,000 on these group of 20 300k accounts, maybe even less at the moment with the benefits that we have. Okay, and then in return, you're 20 or 5, you're over 10xing that, right? And that's really the beauty of prop firms. You don't have to spend a lot of money if you understand a prop firm ROI. Now, let's go through the best ways to scale on prop firms. I always say low leverage firms are the best. Okay, now that's going to be Lucid, Funded Next, Apex. All of these accounts are going to be grouped, copy traded accounts that you spend time on, but in return of just trading little cons but spread across all of these accounts, you will make a good return on your investment. So my best and most highly given and the best way I can tell anybody to scale accounts with my model is what I did. So I made around 100,000 in about a month with Apex before I was moved to live with them. Now, how did I do that? It was as simple and it was a piece of cake when it comes to patience and trading this model, okay? 20 accounts. Now, it's going to cost you around 2,000 if you blow these evals or pass them. It's dependent on your trading and how you manage these evals, okay? But once you have these 20 funded accounts, okay, you will have 20 50k accounts that you paid 2,000 for. Each payout cycle for the first payout cycle being $1,500 per account, which is almost per account max payout going to be giving all your money back from just paying for these evaluation accounts. Now, this is what prop firms don't want you to know. The ROI is insane. The best traders actually spend the most on evals, you know? The best traders actually invest most of their money back into evals. You know, traders who make millions a year, you'll know from prop firms, if they're making millions a year, they're actually putting over 100,000 in that year on evaluation accounts, maybe 30 to 40k a month. Okay, that's the prop firm ROI, and that's understanding it. Now, like I'm saying, the best way to scale, in my opinion, is Apex. 20 accounts of Apex, 50k accounts, risking $200. You have 10 trades before this account is blown, and it's so simple. All you have to do is trade this model with the edge, so you understand the bias, you understand where we're going. Trade that model every single day. Like I said, 3 to 4 trades max, and after you win, you need to get off the chart. That's as simple as it is, and it's so easy to say, it's so easy on paper, but when you actually put it into the market, it can be difficult. But this is literally the only way that I tell people to scale. If you're in that situation where you're at the very bottom, I would suggest Lucid, because Lucid offers a similar account with easier payout caps at only $100, okay? But moving to Apex is when you really get those first 6-figure months. You really start to build your own balance, your own account where you can then fully invest and fully scale with prop firms and turn into a trader like me, for example, right? And actually make a lot of money and live extremely comfortable from prop firms. So you have these 20 Apex accounts, $200 risk, and you can do anywhere from 3RR, fixed 3RR to fixed 5RR, and in return just play the trade out every single day. Look for those A pluses. It would only take 5 days with A plus in order to take out 20,000 plus. Now, with some firms like Lucid, it would only take 3 days. And with Apex, it only takes 3 days with actually getting a winning trade, a good trade, and then 2 days of $250 in order to take out that money. Now, when I'm saying it like this, you guys can all do that on paper. You guys can find that easy. Everyone finds OT setups every single day. But now it's taking that leap to understand psychology, manage these accounts, understand it's not even real money, and you're getting paid out a lot of money for it. And in return, that's why I think Apex is the best for scaling. Now, guys, we'll be getting on to really quick, before we go through the recaps, I'm going to be getting on to just going through my basic model. For the people who don't really understand it, if you'd like to skip this part, you can. And then we'll be really going deep into these recaps. These are just the recent days. As you can see, every single day was a win. Now, that's not how it's meant to be. You don't win every single day. However, I was on a little win streak, so we'll go through it, okay? But first, I'll be going through my actual model. Really easy said and done. High to low fib, whatever. And then we'll move on to the recap straight after. Okay, so starting with the simplicity of my model, we're not even going to go through the steps of draw or anything right now. I'm just going to show you how it's basically put on the charts, okay? So very simply, we're aligning PD arrays with a range. Now in this scenario, this is how it played. Now you're going to be asking questions, the draw, whatever. We're not even going to go through the draw. I just want to go really simple mode right now and just show you how I trade. Okay, so you mark the fib from low to high, okay, and you basically distinguish which of these levels is valid. Here is my settings. So we have the 6.2, the 7.05, and the 7.9. Very simple. Okay, now we basically want to distinguish which one is valid. Now how do we do that? By looking which one has the aligned PD array. Specifically, my favorite PD arrays to align with these levels are the hourly and the 15-minute fair value gaps. If not, 4-hour order blocks are even nicer. But on this, obviously on this range, as you can see, we're marking this on the 15-minute. So putting it back, what can we see? The 705 is perfectly aligned with a PD array, and it's the start of this PD array. So this, in this scenario, would be the nicest trade to take. Now saying our draw is this high, we would like to catch our trade and then trade up. Now there's two ways you can do this, okay? First, we are always entering on the OTE level. We're never entering on the PD array, we're entering on the OTE level. In this scenario, due to the range being extremely high in volatility and it's a lot of points, this is a comfortable 20-point stop. Now, for a lot of people, this is extremely high RR. For us, we do this almost every single day. Now, we don't always target the draw due to consistency. However, there's multiple ways to take this trade in order to, in a sense, better your win rate and understand the markets better. So in this scenario, as you can see, we do tap it and just go straight to TP. But how could you have caught this without just limiting this entirety of a range? Well, you can do the exact same thing on the lower time frames. So look, let's go back in time. Let's just ping the level, which is the 705. And let's just wait for this level to get tapped on the 1 minute. As you can see, the level does get tapped and it has a huge pump. This is obviously signaling that we can entry trigger this trade now. Now my entry triggers are very simple. I just do the exact same thing as I do in the higher time frame. So when price comes back down, look what you can do. Very simple. You just, once again, align your fib low to high, distinguish which level is the best. As you can see, this is a little bit more complex, but the 7.9 is aligned with an order block, but not just any order block. This wickless candle is very sensitive for price. When price or a candlestick doesn't have a wick with it, it's actually a draw and an entry point for price. So this was the entry that I took with my students, as you can see, and you can have your stop at this low with any entry you take, sorry, and then either TP at this high for a 4RR, or if you had your draw here and you're trading on a high leverage account, you can also trade towards these highs. But taking trades with extreme RR isn't sustainable. You don't want to be using high RR all the time. As much as it's good, maybe for your psychology as well, it's not something that you need or have to do. You don't need high RR to be profitable, and if anything, and you're getting reactions from these ranges, taking TP anywhere from having a fixed 4RR, for example, or any internal range is extremely important and good to do. So that's just the basic of our model. Fib low to high, high to low for bearish ranges, aligning PD arrays with the 705, the 79, or the 62, depending on the PD arrays within it. Boom. Simple. Okay guys, what better to do than start the first trade overview with the trade I caught today on my funded Next accounts to achieve daily payout max payouts and my Lucid accounts to be paid out too. So starting with the funded Next account, this is the OTE setup that we took for the shorts. As you can see, the executions, selling, buying, right? If you can read the numbers, it's quite clear. Selling at 28001 and then TPing, I think it's 27788. It was 4,200 per account, putting these accounts at max payout for daily payouts. And let's just go over this trade and how this clean overview happened for today. So going on to NQ, we can identify that we had a sweep and we was already naturally bearish on this range. However, we expected a temporary draw to reside inside of this bullish range. So my TP was going to be the equilibrium to protect that the trade would actually take profit without having this reaction like it did. So what do? High to low, fib low to high, and then we had our 6-2 aligned with a 15-minute order block, and then we TP'd at the equilibrium of the range. Now, why was this trade A+? Well, number one, we have to take everything off. What was our draw? Our draw was originally bearish, and we were targeting the unfilled equilibrium of this range, okay? Meaning that because we swept already, there was no other temporary draws within or residing anywhere else, okay? Number two, what made this range valid? Even though it looked rather choppy, we were still rejecting, okay? So we swept the previous highs, okay? Then we rejected from the bearish PD arrays, and then we came back up, protected this order block, and we traded into it aligned to the 6-2. And then finally, obviously, we have the third and final most important bit, and was the range valid? Did we have anything aligned? What was aligned with the 7-9? Nothing. What was aligned with the 705? Nothing. What was aligned with the 6-2? An order block, a 15-minute order block. So that was obviously the best trade. We open, we get tapped in immediately, and we dump down to our TP. Now you're probably thinking, did this reject from the range too? Well, remember who you're speaking to. We are taking trades that are valid. So now that we've mitigated the equilibrium and our take profit has been taken, what you can do is look for the valid range on this bullish leg. Once again, low to high. Now, which range is better? Okay, and how does this make this range valid in general? Okay, so number one, where's our draw now? Our draw to go lower is to resweep all of this inducement and tap into something like this 4-hour order block that is above here. We can't expect to go lower before mitigating something on a higher time frame. Remember, we are trading residual. Higher time frame bias and draw is very important. So this range was valid because there's no way we can expect to edge higher time frame and then just go to our draws, especially as this was, during the start of Asia as well. So the 705 was a beautiful trade. As you can see, it was perfectly aligned with this fair value gap. It was better than the 6-2 and the 7-9. So now we've ticked 3 off, okay? Number one, the draw was correct, okay? Because we understood this high needed to be taken. Number two, the range was valid because we swept everything out and we needed to take the full draw in general, okay? And number three, that this range was reacting off of a monthly PD array, meaning that was what really finalized it. We expected some reaction from this range, of course. And then number three, inside of that range, there was a fair value gap on the 15-minute aligned with the 705. So once again, we ticked off the golden 3, which meant this trade was valid. Now, the 705, I took this trade on my Lucids, but I didn't take it from the limit. I decided to wait on the 1 minute for my rejection range. This is something you can do when you're not entirely confident on taking that trade, okay? So once again, the same laws apply. We reject from the 705. We have the draw still, the draw is still correct. The range is now rejecting, which makes the range good. And then as you can see, we have a wickless candle right here. A wickless candle is very, very important. You can enter either the 705 protecting the low or the wickless candle, and that being easy. Now on these Lucid accounts, you can see my executions right here. Look where I took out. I only needed $700 for consistency, which is very, if I was trading a high leverage account, which we'll go over properly later, it would have been an entirely different situation. However, when you're trading low leverage accounts, you're usually going to be taking out a lot less due to the consistency rules. But that's the first recap done for today. Okay guys, for our second recap, it was the first trade I showed you inside of the mood board, and it's very, very clear with OTE. Now, as you can see, before you even see anything, it's just a sweep of all the previous inducement, which is liquidity in the market, making that range and then rejecting inside of that range and dumping. Now, I was bearish because it doesn't necessarily take a large amount of brain cells to understand that we are just in a downtrend. Now, I don't like to judge my bias from trends. However, when we're just trending down and leaving bullish SMTs and bearish SMTs, we don't want to see any reversals from there unless we tap into something extremely important like a daily, a weekly or a monthly PD array to the upside, right? In the case that we don't get one of those and we don't get a huge rejection, it's safe to just continue trading towards the trend and trading towards the downside. As dumb as it sounds, people will clown you for that, but you'll make a lot more money in the long run. Trying to catch reversals is against the linear curvature of profit, okay? Do never really put consistency on reversals. It doesn't make sense, okay? As you can see, the trade was really clean. Okay, we actually caught the long as well, and the long was, if I believe, it was the, yeah, as you can see, it was the 705 of this range, and it was aligned with this PD array, and then it was also the 6-2 of the entire range. But this trade was also a little bit more complex. This trade was very simple. Now, what PD arrays can we identify in this trade? As you can see, we have a 15-minute order block. Okay, now this order block is perfectly aligned with the OT of this trade. Okay. Now also we have PD raise on the 5-minute as well, showing that this trade is good. And then also what makes the range valid is that we swept everything out. So number one, we swept everything out. Number two, our draw is correct because we're obviously trading towards it. Okay, and number three, we have PD raise within the trade. Now all three of those align and make this trade A+, meaning you can take that trade from the 705 due to the high volatility anywhere from a 30 to a 50 point stop covering the 7-9 and taking TP at the first internal low, making this the 4 to a 5 RR, or you can take TP at the second internal low. Really simple second trade recap, guys. Just OTE, high to low, bias, and the 3-point checklist. Okay guys, so getting on to the final trade recaps now, I want to just briefly go over this. I did talk about not trading against the bias, but we need to also understand before we go to an important price or an important low, you need to do something important on the other side. So this trade I took here, which I'll put on the screen now, was directly after the first trade recap. Now this, okay, was the 6-2 of the entire range aligned to the 15-minute rejection block, right, which is a wick. Okay, now why did I take this trade? I simply took this trade because it was right the candle that we opened on. Now you can take the mean reversion of this candle and completely flip it. Now price in Asia will most likely not go towards your fancy draw that you've been looking at, especially on a Monday. Okay, now once again, a little bit more discretional, and this trade was pretty much targeting these highs to then sweep out and then take the short, which I'll also put on the screen right now. This short I also took, okay? Now, this trade was a lot more clear and easier to see, and we'll go through this recap right here. Now, as you can see, we open here. This is an Asia trade. Most of my trades are in Asia, okay? We open here, and we gap down, leaving this draw, okay? Price then uses the OT of the bullish range and trades back up. We take the 7-9 of this trade. Now, can anybody guess why we take the 7-9 of this range? The reason being because it was aligned with a PD array. The 705 and the 6-2 weren't. But what makes this range valid to take this trade with? Well, as you can see, we had, or you can't really see it, but we had SMT at these daily highs, and this daily high was rejecting off of a daily PD array, meaning we now had our POI, our PD array on the higher time frames that we tapped into and rejected from, made the SMT, thus making this a valid range. A lot more valid than this, I will admit, but this is a pinnacle of an A+ setup. Rejecting into the 7-9, I took this with all my students, and then all my students actually passed their accounts in this trade because they all took TP all the way at the devil's mark. A devil's mark is very important as a draw. Like I said, it's a wickless candle on the higher time frames, and when we have them, price loves to trade back down to them. So this was the trade. This is the third trade, obviously. So these are the trades that I took. I'll mark out. Obviously, you guys have seen the proof, but these are the recent trades I took. So I took this trade here, I took this trade here, I took this trade here, and I also took this trade. Like I said, I traded back into it. This trade was from the 6-2 of this range, so we'll identify that now as well. OTE will work a ridiculous amount of times if your bias is correct. As you can see, literally just here. It was the 6-2, or you could have used the internal range and the 705. Same trade. That's literally how easy it was. Back to back to back to back. Now, not every day are you going to ping pong the market like this, but some days you will have really clear setups. Now, how would you be able to continue trading down if you missed the setup? Let's say you got on for London session. Now, this is not a trade I took, but we'll go through it. So price then decides to reject from this range's equilibrium, leaving another range, as you can see. Then what does price do? It trades into the 7-9. Why? Because there's no PD arrays located at the 705 or the 6-2. Now, high to low, range continuation trade, just the same trade, and we trade down. Now, what if you didn't catch this trade? Then you could have just taken this range. You see how easy this is? Boom, 7-9 again, as you can see. Once your bias is correct, your trades will play a lot more. as you can see, once again, taking TP at these external lows. Okay, that's really how easy it is, guys. This is probably all the recaps I'm going to do for the video, but as you can see, it's extremely easy. Oh, will also recap this. I'll put it on the screen. I also took this trade. Boom. I believe this is the trade that I took. I think I do have a screenshot of it. This was the open trade. Once again, continuing the bearish bias, as you can see. As soon as we opened, we rejected into the 705 and we took the re-entry of that trade on the lower time frames. Let's just go through and show you this. Once again, a little bit more discretional and harder to see. But as you can see, what did we do? Is we rejected from the 705, made that range, and then we traded back into that range like so. From the 7.9, and then we took our TP at these lows. Very, very simple, guys. Super simple. I hope everyone understands the model correctly and understands how to use risk management accordingly. And this is the exact model I've been trading for the past 1.5 years. It's becoming very popularized now. People are trading OTE because they understand it works. I want everyone to know and learn from the people that actually make it work the best, which is Pew. Hello guys, if you don't know me, I am one of the best, if not the best OTE prop firm trader in the world. I did make the most money when I was 18 years old. I was the highest paid out 18-year-old in the whole of the United Kingdom. So that's pretty cool. And this is a complete model that I use with proof. So I love you all guys and have a great day.